Hello there and welcome to IMTV and this week's Industrial Minerals news programme. Coming up, Indonesia to ban the export of all raw material mining products. Leading refractory producer RHI's earnings jump for 2012. And Vale withdraws from its Rio Colorado potash mine. First today, Indonesia will introduce a strict ban on the export of all mining products in raw material form from January 2014. That's according to the country's Director of Export of Industrial and Mining Products. The Minister for Trade was speaking at Industrial Minerals' 19th Bauxite and Alumina Conference in Miami. The minister said the ban will be very strict with no exceptions, adding it can only be revoked by the Indonesian House of Representatives. The ban is intended to encourage international companies, which would normally perform their downstream processing abroad, to perform it in Indonesia. It will affect raw material exports of bauxite, limestone, quartz, zeolites, feldspar, iron ore, slate and onyx. Bauxite makes up a large number of exports from Indonesia, and after the ban, mining products will only be allowed for export after processing. However, doubts still linger about the effectiveness and benefits of the mining ban. Cuadrilla Resources has decided to delay its plans to begin hydraulic fracturing or fracking for natural gas in the UK until 2014 because of the need for further environmental assessment. Cuadrilla had planned to drill and test a well at the Annas Road site near Blackpool in Lancashire during 2013, but a statement issued this week said it had withdrawn its planning application. They say they'll carry out a full environmental impact assessment, a process that's likely to involve a lengthy period of public consultation. The company stressed there were no safety concerns at the site and confirmed work was not halted under the government's traffic light system, which requires a suspension if earth tremors are caused by shale gas extraction. Despite the delay to operations at its Annas Road site, Cuadrilla has confirmed that ongoing technical analysis of the data gathered from exploration of the Bowland Basin shale in Lancashire showed the area holds at least 200 trillion cubic feet of gas. Cuadrilla intends to return to the site and complete work in 2014 if all the necessary approvals are granted. If you want to find out more about fracking in Europe, sign up for our Propent Prospects for Europe roundtable on the 30th of April in London. Leading refractories producer RHI saw a growth in revenue despite a lower sales volume and an 11% rise in earnings for 2012. The company said that weaker end markets for its materials affected trade, pointing to weaker steel business in Europe and weaker cement and glass business in Asia. This led to sales volumes across the group for all its materials falling 5% year-on-year to 1.85 million tonnes from 1.95 million in 2011. However, revenue increased 4.4%. Earnings for the year were at €167.6 million, up from €151 million the previous year, while profit fell from €121.5 million in 2011 to €113.5 million. The company also highlighted its new 80,000 tonnes per annum fused magnesia plant in Norway will work at full operation this month. The plant was unexpectedly closed in November last year due to a technical fault which led to a crucible spillover. Fortunately, no one was hurt. One of the big five chloride root titanium dioxide pigment producers, Tronox, has been downgraded to hold by BWS Financial amid continued pricing weakness and rumours of a major acquisition. Tronox recently announced it's received a new $1.3 billion senior secured term loan provided by Goldman Sachs, UBS, Credit Suisse and RBC Capital Markets, which would be used for general corporate purposes and/or potential strategic alternatives. This funding drive has sparked rumours that Tronox may be looking to make a major acquisition. BWS Financial issued the following statement. The added level of uncertainty brought by management's eagerness to do a deal, in addition to the current state of the titanium dioxide market, leads us to downgrade Tronox shares to hold. There is time to get back in if titanium dioxide prices do go up, as a benefit to earnings from an industry turnaround could not happen for at least another 2 to 3 quarters. We fear any large acquisition would put Tronox in a disadvantageous position. Without titanium dioxide prices roaring back, Tronox would end up with a levered balance sheet and could end up not having a natural hedge against feedstock price volatility. Vale has confirmed it's suspending work at its $6 billion Rio Colorado potash mine in Argentina. Rumours have been circulating for months that iron ore giant Vale will pull out of the project, although the company hasn't confirmed these reports until now. This marks the latest move away from the company's commitment to become a major player in the fertilizer industry after announcing a $12 billion agri-mineral investment plan in 2011. The company also recently mothballed its $3 billion potash project in Saskatchewan. Vale has doubled the estimated budget of the project, stating that costs at the Rio Colorado mine had spiraled from $5.9 billion to $11 billion, following exchange rates controls and inflation measures. Speaking at a conference in Hong Kong, Vale CEO Murilo Ferreira said the bearish macroeconomic climate had made the Rio Colorado project commercially unviable. Now, before we go, don't forget you can set up a corporate account that will benefit you and your staff. And if you're interested in advertising or sponsorship opportunities for IMTV, contact Benjamin Ash by email bash@indmin.com. Well, that's all we have time for this week. If you have any comments or feedback, we'd love to hear from you. You can get in touch via Twitter @Indmin or contact us through our website www.indmin.com. Thanks for watching and see you again soon.